Hello everybody, welcome back. Let's do this again. So I just made this whole video and it didn't have any sound, so let's start this again. So we're going to look at Bitcoin and Ethereum, Bitcoin dominance and the Dixie to work out what's going on with the rest of the market as a whole. But I'm going to be doing a live stream tonight like I do every Tuesdays for Patreon users, but if you want to become one, it's £7.50 a month. It gives you access to 2 live streams every week. So basically about 16 hours worth a month, and we can look at all the altcoins that you want to look at there and then. So there's no need to do that today. We're just going to look at these two and get an overview of what's going on with the market, and then tonight we'll look at all of the little altcoins that we like to look at on your request. So Bitcoin, this is the deal. So today we're seeing a bit of a bounce. No big deal. This is kind of what we were expecting, just based on the RSI alone. You know, an oversold RSI of this size usually incurs a bit of a bounce. In fact, yeah, it's not massively oversold. It's about 25. We haven't seen these very often, but every time we do, we generally get a decent bounce. So double bottom here, a bottom there, and a bottom here. So this doesn't mean that we're going to get a full-on Bitcoin reversal, but it does mean that we're likely to see a bounce. Also, if we have a look at the way it behaved in the last 2 times, double bottom here, touching the green 50 exponential, then tagging the 50 moving average. This time we didn't get that, and this time we're in between the two. So a reasonable place to assume a bounce from. But you know, even though the overall direction is still up, I mean, there's no arguing about that. It's still definitely up, and we've still got that conversion baseline cross here with Chiku span still above the price action. No negative cross taking place over here. So until that happens, you know, this trend is still in play. So there's that, which is, you know, still bullish. We've got an uptrend which is still bullish. We've got a conversion baseline cross, which signals that we're still in this current uptrend from this signal here. It might not feel like that because technically we went below the price where it took place, but we are technically still within it. We are at the bottom portion of the Bollinger Band, and usually, you know, yeah, the rule of a Bollinger Band is that, you know, when you're above it or beneath it, you're more likely to stay above it or beneath it. So there's more chances of rejections from this zone than there is of a breakout. Only slightly, 65% more likely to stay below it. So it's not a great deal of percentage. So we've got mixed signals at the moment. Also, I just wanted to let you know that if we have a look and measure these moves from this last run here down to the bottom, that was a 30% retracement or thereabouts. This was also about a 25% retracement or thereabouts, and at the moment we're looking so far at about an 18% retracement. Yeah, so that is bullish in the way that you could argue that the dips are getting smaller each time, but also, you know, when we look at this on a grander scale, we go to a weekly, we do have that bearish divergence on a weekly. We've also got it on the 3 daily too, which would mean that if this does play out, it could end up being worse. So I'm not, you know, a massive bull or a massive bear at the moment. I am very, very happy to say that until we continue with an uptrend or we see a breakdown, I'm more or less neutral, so we can play this bounce for what it's worth, which is a bounce, and this is the area for rejection around here. And if we don't get rejected from there and we spring above there, all the comments will be left on here saying how much of a fool I was for not holding. But it's not so much about being, I suppose, a risk taker, you know, in order to get the biggest moves. It's also about preserving the gains that you've already made, or just playing these simple bounces. Now, I'm not suggesting anyone does longs or shorts or leverage or even trade off anything that I say, but for me personally, you know, it's been a very, very good well, I mean, it's been a pretty good 12 months in all fairness, longer than that, but yeah, I mean, the last 12 months have been phenomenal. And you know, I you know, when it comes to trying to guess which way it's going to go, that's not the way I like to play it. You know, I've made a fair whack over these last 12 months, and I'd like to try and keep it, you know, keep some of those profits. So I'm very happy to not sit it out, but play a bounce for what it is, and look for maybe taking profits around about pretty much where we've already got to. We've got the grey one here, 21 exponential moving average. This is obviously the center of the Bollinger Band, and all these others in between it. This is a significant area where I would expect rejection from. So pretty much where we are right now to the max of this area here, which is 55,690, or the lowest area of 54,250. But you know, like I say, we could easily rocket from here. but it's not for me to say. So one thing that was has been an overwhelming force upon all this has been the Dixie chart. So the dollar index clearly in an uptrend. As we can see, we had this this signal here, the conversion baseline cross above the cloud, a good signal for a continued uptrend. So if we're thinking about this as for what it is, the uptrend will continue until proven otherwise. So we can look at supports and resistances. This should have been a resistance. Technically, we broke above it and we're retesting it as support, which is a little bit of a worry. Next level is going to be up here around about 93.36. So that would be the area of rejection I would expect next if this one does springboard from here, which it looks like it wants to. Might not happen today, but from next week perhaps. Obviously, this is susceptible to anything that the American Federal Reserve do. If they want to do something ridiculous and silly, it should bring this down. But the chart alone, on its own, does prove to be bullish reversal at the moment. This can only go so far. I can't imagine it going completely crazy. We'll have a look at it on the longest time frame, and what we see here now is it's not massively worrying, but it does suggest that there are areas where we could come all the way up to 93, 94, maybe even 94.5. So a little bit further to go if it does do it. Now, if we look at the way that we reacted last time we came down here, this is the last previous Bitcoin top. Now, this is where it hit 20,000. So there's no coincidence here. There is a correlation. $20,000 all-time high, big bear market for a year. Well, you could argue that this is the last maybe Bitcoin top. Are we going into a bear market? I don't think so. But we could have a period of consolidation for Bitcoin until the Dixie gets rejected. On the longer term time frames like this monthly, for instance, it does look a little bit more sorry for itself. We've got a high here. We've got a lower high here. We don't have a lower low. If we look at it on the weekly, we've also got a negative cross here on the weekly, and I mean it's these areas here between 93.3 and 94, almost 94.5, where we would be expecting rejection. So things could get a little worse these are lagging. These are very lagging. Look, this is a weekly now. This could go on for quite a while now, and offer some down pressure to everything: stocks, commodities, obviously trading pairs with the dollar, and Bitcoin. So we spoke about that briefly last night. So this is something to be aware of. I mean, it does look like this is going to have a continued uptrend now up to those levels between 93 to 95. We'll call it that kind of zone, which it's not the end of the world, but it could cause down pressure. So taking profits for me is my preference, not holding any kind of bullish or bearish bias, and be realistic about maybe this could be the end of the run for now, and will cool off for a period of months. So one other thing we'll look at just very briefly is Ethereum. Ethereum's looking pretty sorry for itself. It's not looking very happy at all on the daily here. We are a much worse situation here than we are on Bitcoin, below pretty much all the major moving averages here. And the only thing below us, as far as moving averages on the daily is concerned, is this 200 exponential. Just to make sure the sound is recording. Yes, it is. Is this 200 exponential, which is coming in at around about 1,010. So another 33% drop, which doesn't sound too bad when you think about the potential drops that could happen in a full-on bear market. But it'd be the first time we touched that and tagged that. That's the worst case scenario in my opinion. If we look at it against Bitcoin to Ethereum, on the trading pair itself, we have still got this uptrend that's roughly still in play. So as I was saying yesterday, I'm willing to hedge into using a trading bot to sustain any kind of temporary downtrend as well as uptrend, while I'm still profiting throughout the process. Because if we look at this on a 14-month basis, which is what it is, we do have these runs against Bitcoin. We've had a few of them over the last 14 months. It would be reasonable to assume that we will get a couple more, even if it's just one more. There's another run that can take place there where Ethereum comes out on top of Bitcoin. And if that happens, then it should cause another dent on this, which is the Bitcoin dominance chart. Breaking down below 60% dominance would have a continued alt season. Now, I get a lot of people say to me, on the comments and even in Telegram, like, Where's the alt season, man? Well, I mean, the alt season has been going on since late January, mid to late January, just as predicted. It's been going on since then, and technically we're still in it. So I don't know what people are referring to when they say, where's this alt season? I mean, the alt season has been going on for a very long time. It's been a pretty severe and savage alt season. If you've not at least doubled, tripled, quadrupled your money, maybe, I don't know. I don't know how you managed to not do that. A lot of people on my Telegram, you know, they're all independent traders of their own right, but I mean, most of them have done pretty well because this alt season has been pretty aggressive. Now, what's happening here is that there's no clear direction. Bitcoin and altcoins are kind of having this little battle, a cooling off period, and again, it's come down to the same kind of decision as Bitcoin itself. Doesn't know which way it wants to go. It doesn't have a clear direction. We do have this, which is a death cross. We do have this, which is used to be a support and now appears to be resistance. So it's all about battling this zone here. And if we look at this, it's basically a matter of breaking down below 60% dominance. It's not going to do that on its own. It's going to have Ethereum do that with it, or do it for it. So if Ethereum continues to look as sad as this, it might not happen anytime soon. Ethereum really does have to make that rally. And the reason a lot of it depends on Ethereum is because Ethereum is such a large cap coin that when it makes a move, it does have an impact on its own on this chart. And then when this chart breaks down below certain levels, it's like a domino effect. All the other altcoins will follow suit because it would appear on this chart alone that altcoins are stronger, even if it's just started by Ethereum. So yeah, that is an overview of the entire market for you. Hopefully you will join me on the live stream tonight. We've got links, all the links you need below for either setting up bots or joining the Patreon or just getting 20% off your Binance account, you know, all your fees on your Binance account. They're all below. All the links are below. Other than that, join my Telegram, and all of that's free, and we can talk about cryptocurrency as long as you like. Anyway, thanks for watching. I hope you have a nice day. Take it easy.